Hey Alpha Fam, welcome back to another episode of Alpha Commission. Today I just want to go over the nasty fall that we're seeing on the charts here, which of course, if you've been watching this channel, we've pretty much predicted that this was well within the range of possibilities. In fact, I'm going to go ahead and put the levels that I've had drawn out for a while now. And of course, all of this corresponds to various concepts that we've been discussing on this channel. In particular, I'd like to point out this trend line right here and this trend line right here, this blue one at the top and this orange one, kind of at the bottom here. These actually correspond with the kind of an average of the 89 and the 50 on the 3-day. And this one at the bottom here corresponds to the 200 EMA and the 200 MA, again on the 3-day, because those two EMAs are converging into a dynamic squeeze play that in 2018 collapsed the market. So I'm not going to mix words about it, but we back tested these things, tried to take a look at it on the daily, on the 2-day, on the 3-day, on the 5-day, on the weekly, on the bi-weekly. And what we could see that most corresponds with the Gaussian channels and some other theories that we've proposed here is that this, basically this average line and this average line converging is not a good sign. It's not a good crossover for the Bitcoin chart, however the algorithms work, okay? And I'm not sure if you're seeing this, but we have literally broken straight down to that line. I had this line drawn out before before that fall happened. We were talking about this, I believe, yesterday or the day before. And just look, we came straight down to this line that I've drawn out here. That doesn't mean that it has to stop there. I actually do have a couple other support levels as far as horizontals, if you want to just consider what could go on. And I'm on the 6 hour right now. So if we go ahead and just go into a lower time frame, let's just say the half an hour, maybe we can see a little bit of bouncing around on them. Yep, see that little bounce? Let's go to the 15, maybe even the 5, because this has just been a dramatic fall. And you can kind of see how, this was where I had you buy in a long time ago. I forget how long it was, approximately a week ago, saying this would be a confirmation buy for me. Nice double bottom on support. And, we just confirmed it here again, and kept going. And this would have been a decent trade. And then once you got outside of these EMA clusters, which I showed you how the EMAs worked with these, then I said, it's a little bit risky here for me, and that, to be honest, we failed here, and we'd have to get into this region, and I'd expect us to get rejected in this region if we were even able to get above 41,500. And I mentioned how 41,500 was just absolutely critical to get above, to hold this upper half of this wedge if we want to have any possibility for a bullish Bitcoin. And I said, just more likely, what we're doing is we're getting squeezed by this, 3-day, 50, and this 3-day 200. And then, of course, this is our trend line here, right? This kind of resistance. This was based upon the fib channels, right? So a really hard rejection on the fib lines, Fibonacci, which also algorithms use for trading, and lots of trading theory uses. And then this was just my own support line, which I drew out of my own imagination, no reference for anything else. But that held up incredibly well, incredibly well. And this could have been some very good trading along this path. Of course, if you were just looking at horizontals, you would have totally missed this. But this has been great support. And look what happened here. I mean, some people want to say that, this stuff doesn't work, but look, we broke down from it. Look at this perfect wick. Look at this perfect wick. What am I on, the 4 hour? Look at this perfect wick to touch it. tried to bounce, just failed. That was your cue. You know, we wicked here, and we turned around immediately. It's like, okay, we're coming back down to that wick. We're coming back down, right? And because we didn't get any type of liftoff, like this was just an utter rejection, just a failure, just to confuse people before they like slammed them back down. And of course, we came back down. We broke. You know, this was became an engulfing candle. We broke through the wedge that I had drawn here, right? Which you know, this is a fib channel that I'd marked out, and then my original concept here. And then after breaking down, we had one last chance to get out. I know some people who you know thought this was going to be another bounce here, but because they weren't using this diagonal, you know, they longed and they were caught off guard that this wasn't. You know, again, like these things don't always use horizontals; they use diagonals quite a bit. And so look at this; it was just a perfect retest of that diagonal. Okay, there's nothing else to say about that. Perfect retest of the diagonal. And if you imagine it this way, this was a breakout to the downside, right? It's called a breakdown. And then where did we end up popping down? Right to that 200 that's acting as support. And again, I'm on the 4-hour, but this was the 3-day 200. And it's just bouncing right into that region. It had some small interaction. Let's go back to the 5-minute. Had some small interaction with this. Yep. Right there, right there. It just like hit right on my green line. That's the support line, horizontal support. These horizontals are important. I don't never mean to dismiss horizontals. I'm just saying I also like to use diagonals. They're uses for totally different things. Horizontals are just amazing, like supply zones and you know buy zones and all that stuff. But in case of the diagonals, it's just something I don't even know how to describe it, but it's just it's a channel. That's what it is. They're channels. And so yeah, look, we broke down from it, bounced up, kind of faking people out, trying to say, hey, maybe you want to go long here, you know. But nope, nope. We're getting a rejection straight off of that, right? Straight off of it, we turned that support into resistance. And while we do seem to have some buying here, and this is a 5-minute, looks like it's trying to build in some, you know, it just looks like there's a little war going on here, right above my kind of critical support area. I would expect that to hold, but if it doesn't hold, then probably we're gonna go down to these other support lines down here, these horizontals. I don't have diagonals for them, but you know, we have one here at like 38,250, and then I have another one down here around 37,700. And you know what? I'm kind of seeing this right now, but probably get rid of that buy box area. It's no longer relevant. But what I could see is that we do have some type of diagonal support right here. And wow, that's interesting. Yeah, it actually goes straight to the apex of this wedge. Look at that, how everything is just getting funneled in that same direction. And while I don't consider this very strong support, I guess conceivably we could use that 36,900 as kind of a support if we do break down from these other levels. But yeah, we are out of this wedge now, and that was quite a bearish breakdown. So we do have these layers of support. Just watch how we move through them. Stocks not looking good. You know, stocks are not looking good at all. We did have quite a few drops in the open markets, despite it being a holiday. We saw the NAS 100 just slipping down, right? Like we could have watched this slip down. I marked off where it was on a line, and then it just kept going down here. So that's just very bad sign there. and perhaps the rest of these markets are going to follow through on Monday or when they open up after the Easter holiday. Yeah, this is all just looking like, kind of dead cat bounces. If you look at it too closely, there's nothing that looks very pleasant about these stock charts. As I was thinking about the markets yesterday, I was thinking that maybe China cutting some interest rates might be helpful to the market, but I really am not sure because uh, it seems like China is just forcing banks to lower the rates on deposits. So basically, if Chinese put money in the bank, they're just going to get less return off of it, right? So that will encourage Chinese people to go ahead and put their money into other investments rather than just keeping it in the bank because they don't make as much interest in the bank, so they might as well put some of it, you know, in other investments. And that's China's attempt to move the economy a little bit because right now people are just putting their money in the bank expecting the economy to be going down in China because China's economy its real economy is not doing that great. So yeah, but I'm just not sure like how much of an effect it will really have on the markets because of just how much over the years that China has clamped down on crypto. But the Chinese market is a significant one, and so if rates are being cut in China, and if money is being injected back into the global, system, that could just increase the overall liquidity in the general global investments market, and whatever damage we might have taken this week might have just been reduced a little bit. So I'm not trying to say that China healed any problems or that there's a solution to this. It's just that maybe it's not going to be as bad as it could have been if China had done nothing. But yeah, this stuff looks pretty ugly, so gonna have to wait and see on Monday, how we open up and how things are looking there. Just yeah, volatility is starting to make its way back up. Not sure if it'll just, just it's just a small bounce and if it'll come back down. But kind of looks like it wants to go back up. Not really much to talk about today. It is Easter, so I hope you guys are enjoying your holiday. And as far as I can tell, just you know, not much is moving here. Not much is moving. Everything's in the red. We got some of these coins just moving a little bit. What the heck? Wasn't that just green? Okay. DAG moving a little bit. Just everything red. Just everything's red. Let's go ahead and put on the 5-day. This was a little pattern I was just watching where let's go ahead and put on log auto. You can kind of see this 3 peaks and then a huge dip, 3 peaks and then a huge dip. 1, 2, 3, and then are we going to have a huge dip? I don't know. But that was just something that I was screwing around with, not really serious. Let's go ahead and just see how our good old Gaussian channels are looking like, because I'd like to know if we came to the bottom. Ooh, oh, we are breaking down from the bottom of the Gaussian channels. But, that would be a natural bounce point if we are going to bounce. Obviously, you can see that we've broken down from them before. And what have we talked about? Every time, ignore the colors. Every time that we get underneath the Gaussian channels, it's always been a great opportunity to buy in the long run. I mean, you could say that, okay, this position right here was relatively worse to buy than this position right here. But in the grand scheme of things, this was a consolidation area, right? And so in reality, this, could have been a DCA, right? And then this wick could have been a DCA. This could have been a DCA. Just whenever you were underneath this Gaussian channel on the 5-day, these were just good opportunities. Every time you can use whatever trading principles you like to use when you're on a falling knife, okay? But there's a difference between being on a falling knife up here and buying and being on a falling knife here underneath the Gaussian channel and buying. That's what I'm trying to teach you guys, and I know a lot of even experienced traders can kind of resist this idea of the Gaussian channels. But again, once we break below them on the 5-day, we're already drowned. We already drowned in this tar pit. We're already becoming fossilized, And so, look, if you're a zombie at the bottom of this tar pit, you're already drowned. You might as well dig around for gold and diamonds and things in the earth, because you got to pull something out. Like if you're gonna be resurrected, right? Not to make any bad zombie Easter puns or anything, but if you're going to be resurrected, then you might as well pull some gems out of the earth. And it's really scary to buy in these zones. I can understand, like, it's really scary. It would have been really scary to buy in this area. Again, each of these candles represents 5 days, so you had plenty of time to make your decision. But it wasn't the worst decision that you ever made in your life to buy here and then just wait for the next bounce or the next time you got above that area and, take your profit every chance you can get, right? It wasn't the worst decision that you ever made. Same thing here. And we're breaking down below the Gaussian channel again. How far are we going to go this time? I don't know. Maybe it could be just this little kind of wick, or maybe we could be like seeing one of these medium wicks, or maybe it's going to be one of these really big shakeouts in the market. I just don't know, right? Nobody knows. But what we do know is that we're not really seeing this anymore, okay? Like, can we just put this aside? Like, we're getting multiple chances to buy under the Gaussian channel. And again, these are the times that you want to be buying. And if I had a longer chart up, let's see if I have one. This one go. So Bitcoin actually goes, pretty far back, and this one just ends short. But again, like whenever you're under those areas, it's just a really good buying opportunity. Yep, this is the better one. It goes all the way back to 2010. And so if you were under the channel here, just great buying opportunity. Under the channel here, 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 those wicks were great buying opportunities, to be honest. And we're breaking down again under it. I do predict a bigger breakdown, just in my own speculation. But again, whoever bought on those wicks underneath the 5-day Gaussian channel, they made a lot of money in the trading over the last month or two. And so it's up to you. It's up to you. But you know what you don't want to be is the stupid guy who buys because they see a dip up here, right above this Gaussian channel. Like this is when the idiots are buying. Oh, there was a dip, and then everyone on Twitter says, "Hey guys, buy the dip, buy the dip, guys. Hey, it's just a dip. Buy the dip, buy the dip." And then you just keep going down, and you keep going down, and you keep going down, and you keep buying all these dips and you become a dip. Like you're a dip because you've run out of money by the time you got to this average price. And then you have no more money to buy when you're actually at the bottom of the dip, which is underneath the 5-day Gaussian channel. And that's the lesson to learn. You don't need to be buying dips, until you're at the bottom of the Gaussian channel. And what you should be doing when you're above the Gaussian channel is just trading. You can be trading or riding the wave up, right? Assuming that you bought below the Gaussian channel. What you don't want to do is, have bought, like here, and then, I don't know, just, you can understand, like you should be buying in the underneath the 5-day Gaussian channel, and you should be trading in the middle of the channel, and you can kind of ride it out above the Gaussian channel. And that's that's just a personal strategy that I would use. I'm not trying to, I would never say that you're stupid for doing it some other way or something like that. I'm just saying that people who just are crazy like moon boys after a blow off top, after you did an incredible run, and then they say buy the dip, they say buy every dip. Well, half of these dips don't make sense to buy. Okay? Like half of the dips you don't really want to be buying because you don't know how far down you can go and how many years it could take. This was 2013. This bottom of the market was 2015. It took, 2 years. It took 2 years, and you didn't break even. If you bought this dip, you didn't break even. I mean, you could have broken even there, but you didn't really break even on like the average if you were buying it up here until 2017. So 3 years later, right? So if someone told you to buy the dip here and you just bought that first dip and you're like, oh, cool, like we've been going to the moon, I'm going to buy a dip. Like you would have been stuck in the market for 3 years because you spent all your money on that first dip. And that's your choice, but personally, I prefer to use a strategy. So here we are breaking down. It does seem to be using support. Let's see what the EMAs look like. Not good. Daily EMAs, not good. 2-day, not good. 3-day, not good at all. We looked at 5-day, weekly, not good. 2-week. I mean, this isn't what you want to see, really. And the monthly actually looks, this looks really bad. Like, this is, I mean, look, if we get a little bit of a more of a curve on this monthly, we are going to have a squeeze play to the downside big time, just like here. Just like right here, where this, you can see this red lines, right, and the yellow lines, where these tens squeeze this candle just all the way down through the yellow. These tens are pushing the candles down. They're gonna pop through the yellows, and then we're gonna come all the way down here to the, to these 50s. on the monthly, and that is the $20,000 to $25,000 region. And you know, I don't want to shock anyone, but the top of the Gaussian channel that we're kind of riding on the monthly, right? We kind of like, again, like the Gaussian channel runs out of room back here, so just ignore this. But if this was a normal flow, it would have been touching around here and then continued down. Just it ran out of data. And so where it's bouncing off of on the top of the Gaussian channel on the monthly, right now would sit at around $22,000, $21,000, just to get a bounce to do another wave. We don't have to do it right now. We could just go sideways, and this could like lift up, and maybe we meet in the 30s, right? Kind of like this, right? This lifted up, and we didn't have to just bounce off the top of it here. Like it lifted up, and then quite some time later we met. Like maybe we're just going to meet sometime later, right? Could be 35,000 that we meet later on. And this Gaussian channel on the monthly is not rounding down. So that's actually a good sign that it is going to continue to keep pulling up with us. But these EMAs haven't lied. The 50s have been where we've been hitting on the monthly. And again, that's in that $20,000 range. So I don't know. This is looking very precarious. And looky here. You see this 20 MA? Like it's pinching with the 20 EMA, just like it did right here. And the last time those two pinched with the 10s right above them, it just clipped off and went straight down the cliff. And that's looking like it's about to happen. That's again, just using the monthly. Using the 3-day, I already showed you this. But here's the 200s. And here's the 50s and the 89s. They're just kind of all like pushing down up here. You can see the price action is suppressed by the 50 and by the 89. Like it's been suppressed by both of them, the purple and the blues. And so this whole region has been just an area of suppression. And these EMAs, these blue lines and these purple lines have just been suppressing. You can see the 89 actually MA, it's just a really thin purple line. Let me turn off the Gaussian channel. It's this really thin purple line right here. It's actually at the top of this price action, right? So we don't know if this is actually the 50 or if it's the 89 doing it, but they both seem to be in control of this type of movement. And so what we can see is a lot of suppression going on here by these EMAs, and they're getting squeezed with these 200s. This is the 200 EMA, this is the 200 MA. And again, it's just pinching off. And the last time that happened, 200 EMA, 200 MA, and then we have, what do we have up here? The 50 and the 89, just suppressing price action, just keeping it down, pinching it down, pinching it down, pinching it down into the 200s, where it just gets like wedged and then it collapses down dramatically. And on the weekly, because that was the 3-day and the previous one was the monthly, and on the weekly you can see it checks back to the weekly 200 MA, and the weekly 200 MA is approximately 21,000. Here you can see the price action candle kind of closed around the 200 MA, but it wicked even lower. So if we got wicks lower, you could see like it actually is possible to get into that, $15,000 area. It is possible. What would that correspond with? Well, there's also support here, there's support here, there's support here. So perhaps there's like this line around 12,000, right? There could be like 10,000, 11,000, 12,000. And then we have this previous blow-off top high right here at 17,000, right? Approximately 16, 17. And then the very top of it is around 20,000. So we do have support, where we could bounce off of. Like we don't have to make like these lows. But this is fair game. And anyone who tells you that's not fair game, they're lying to you, because it is within a statistical range. And that's what trading is. It's statistics, right? It's not I call this, I call that. We have a bullish pattern, we have a bearish pattern, so it's definitely going to go to the moon. Nobody knows. Nobody knows. And the market makers and the billionaires and the bots, they all want to try to confuse you to get your money. And so they're going to set up things so that they look like they could just, like everything just looks like it wants to go. If everything looks like it wants to go to the moon, if everything looks reset and ready to just make you a millionaire, they might just push it off the cliff just to take advantage of everyone who's buying into super low positions and then push it off of a cliff, because that's when they're going to make a second dose of money off of you. After already taking that money at the top, they're going to take it off the middle, and then they're going to be buying at the bottom when everyone else has been liquidated multiple times on the way down. All right, guys, wish we had better news for this Easter Sunday. Again, like we are kind of holding up in this area. If we take a look at the weekly, this 89 has kind of provided some nice support in the past right here. Looks like it's attempting to do it again. Again, I have these zones like marked out in advance, and I'm going to keep with them. This, what I said in the previous video was that it looked like we were just retesting this purple line here. I don't know if you guys can see that too clearly, but it looked like we were just testing. Let's see if we can make it a little brighter. This line, which divides the top and the bottom of the chart on kind of a waveform, right? Like maybe like this. We don't know how it's going to play out. And that what we may have been seeing is just like this breaking down underneath that purple line, testing it, like retesting the support, again, failing, and then breaking down. And how many more chances, does it get to test if it can come back into this bullish zone before it really breaks down? Like we could be seeing it break down right now, right? But my projection is that it would actually take a little bit longer based upon just the geometries of everything. I project that we probably have until mid-May, and maybe we're going to bounce around in that area if we are bearish. And I'm not calling that yet. I'm not calling it yet. The reason why I'm not calling it is because we do still have a chance to get above this dotted line. And if we get above that dotted line, we can change certain momentums. In fact, let's go ahead and just double check that. Let's see the Stokes here. 38,600 to cross down. See the 2 week. Oh yeah, the 2 week. See, the 2 week can cross up. And we can start getting kind of an upward trajectory on the 2 week if we can close above 41,600-ish. So where's 41,600? Just by coincidence, it's the middle of this pattern here. right? Which I had marked off not because of that price. I had marked off because it was where these lines intersected, is where these lines intersected. And amazingly, this support intersects perfectly also. So I don't know if this is bot driven or what, but or algorithms or what. But I keep cracking these codes and they keep working out. And then I doubt myself and then they end up working out. So I'm just going to have to keep my theory going because they've been pretty successful, even though I'm not using traditional ways of trading. Just I'm throwing everything at it, but it's been working out pretty well, and that psychologically prepares me for whatever the next move is. But could we find support in this area? Look, we have this support that we could reclaim. We have this support, which we're on right now, this 200. All right, this 200 on the 3-day. And then we have this support, these are all weekly supports, horizontal supports. And then we have this last line of defense, this last critical support, which I think if we broke down below 37,000, we'd pretty much be effed, right? But we could bounce around in this area, potentially even get above that critical 41,000, 600, let's just call it 42,000. And if we were able to hold this top of this wedge, then we could potentially get into this area, which I suspect that we'd be rejected from because we have this hard rejection from the 89s and the 50s on the 3 days that are just smacking us down every single time, right? And then the 89s keep smacking us down on other time frames as well. That's why we have this dip here. And of course they bulged. The 89 and the 50 bulged up here, which is kind of probably why we got this high, to be honest. Like those EMAs are very powerful tools. And I just think that, with this fib channel being resistance, with these 89s and 50s being resistance, and then with all this resistance where we got rejected. Yeah, we broke out of it once, but we got rejected. Just even if we're able to magically get into this $42,000 area and hold it, how are we going to get through all of this and then also get on top of it and then break out bullishly above this with all of the market dynamics against us in the real economy? Well, again, like the momentum can flip here. And once you flip momentum, there can be market FOMO. Like the Fed could come out and say that it's actually not raising interest rates in May, like we could get surprised by something and then everything could just flip bullish and you would be caught off guard. I don't think that's what's going to happen. I am leaning towards the bearish scenario, which I'm trying to prepare myself for, and whoever's listening psychologically, prepare them psychologically for that. And then I'm trying to give really good credit to all these support areas, which I consider down here to be pretty weak support, to be honest. But we do have a lot of support in this area. And, so we could perhaps play ping pong for a few weeks until we get into that May area. And then in May, if we aren't able to break above all of this mess, then probably this is the area where all these things converge and you get the squeeze down, right? This is where that price squeezes down. So how it squeezes down and with what intensity and exactly where, I don't know, right? But this is just my estimate. Okay, guys, that was your alpha for the day. Stay safe and happy trading. And happy Easter.